Well, good morning everybody. First of all, can everybody hear me okay? Give me a yes if you can. Morning Marcus, George, Jay, Mickey. Anthony, yep, fantastic. Morning, morning, morning everybody. How did you like the intro first of all? A little bit different. Ashraf, Peter, morning. Just to let you know guys that this is YouTube live and there is a delay of around 10 to 15 seconds. So if you do type in the chat, it may be a 15, 20, 30 seconds before I can respond to it. A little bit awkward with the delay, but we'll just have to work around it. So the purpose of this room is to review trading opportunities that meet the rules outlined in the educational material within the website. So I'm only going to be looking at opportunities that meet those rules. When those rules are met, I will be implementing them, and that will mean that I'll be taking live trades within this YouTube live webinar. Now, I'm going to keep the webinar limited to just trading. I'm not going to talk about other subjects. There's a lot of people that have work, they have jobs, and I don't want these webinars to be something like 2 hours long. I want to keep them to something like 30 to 90 minutes, something like that. Keep them trade related. Now we will get into the charts in just a moment. First of all, in front of you, you should be seeing the calendar. Today is the 18th, and we do have a little bit of news out for the pound at 3 o'clock. We've got Carney speaking. That's something that we should be paying attention to. Other than that, there's nothing on here for me personally that I would pay attention to throughout the day, nothing that would limit trading. So just before we get stuck into the charts, do we have any questions since this is the first official live YouTube? Is there any questions people want to ask? Peter, jazzy. Yeah, it was a bit jazzy, wasn't it? It gets you a little bit pumped up just before the webinar. I could have gone for something a little bit more mellow, but I thought, no, let's have something a little bit jazzy, get things ready. It is only 10 in the morning after all. Yuri, morning Yuri. Okay, if there's no questions, we will get stuck into the charts. I've actually got a list of potential opportunities here which may have been blown out the water now as a result of the news that's just come out. We will first of all start off in order of my currency pairs. We have the Aussie dollar CAD, and I did have a trend continuation opportunity on it. So as usual, let's start off with the higher time frame. We always want to do our higher time frame analysis. It gives us a perspective on the market. It tells us what the higher time frame is doing, and that can give us an indication of what the lower time frames are doing, and potentially give us an entry reason. So at any time, if you have any questions, pop it in the chat. I will try my best to answer it. And right now on the Aussie dollar CAD then, we are looking bearish. So here on the dailies, we had our swing high, which was up here. We saw a move lower, and with this move lower, I'm just going to put a structure level on. You can see that we actually violated these levels of structure just here. We then saw a pullback, and we are now starting to see the market violate this level. Now I did talk about this in one of the last quick hit videos, and that is that when we typically see a very bearish move like this and come into a 382 fib, and we see another fairly directional move, particularly since we've just violated structure, this is a sign of trend continuation, even though we have not as yet technically violated this lower level of structure. So if I bring this down, this is the very lows of the wicks, and we need a confirmed break below, close below, to confirm that we have actually violated this level. And if we look closely, we have not got that. We've got a wick, and what we've done is we've closed inside that wick. So here on the daily time frame, we do not have any confirmation that we can go lower. However, just based on the way price is moving, the fact is that we are moving lower. The 382 fib, the very directional moves, the fact that we've violated these two levels of structure. And if I look left, I don't actually have enough data loaded. I've got 1,000 candles, but sorry, 1,000 days, and it's not enough data. But just the way price is moving here, it does look as though we can be moving lower. So what we do is we go ahead and we drop down one time frame, and we go and take a look at the 240. And I'm just going to go ahead and clear this off, and we're going to do the same analysis again. And guys, if this room is moving a little bit too fast for you, because there will be a variety of traders in here, from brand new traders that are only just starting out, through to experienced traders that do know what a violation is, or a break below, close below, or a double bottom. Don't worry if you don't know what that is. At this stage, just follow the room. And as you go through the educational material, which is in the website, that explains things like violations, double tops, double bottoms, different strategies. So here on the 240, let's draw out our trend. We had a move lower. We saw a pullback. Right at this point, we had a confirmed break below, close below, or violation of this level. However, it came into this structure level here. What we then did is we saw a pullback, and now we've seen another move lower. So what I'm just going to do is put a structure level on at the closes of the candles. So you can see right now we've violated the most recent structure low, putting us in trend here on the 4-hour time frame. Now if we just look left, there won't be any structure here because we checked on the daily, so there's nothing there. But based on the way price is moving, we can be looking here for a retracement anywhere within our outside return, and our outside return starts from the top here down to the wicks just here. Now, does everybody know the 3 strategies we can use to get involved with a trend continuation trade? You may not have had time to go through the educational material, but we have the first chance entry, the second chance entry, the third chance entry. Renko, yeah, we'll get to the pound yen soon. I did have on the radar there a potential ABCD pattern, but I would need a 2618 entry, so we'll go and take a look at that very shortly. George, yep, you know what that is. Ashraf, yep, okay. If you don't, it is in the educational material. So basically, standard trend continuation setup here, where we're going to look for the first chance entry within the wicks. So that's this area highlighted. Second chance is within the candle body. And the third chance, which is the last chance, is in the wicks, this very small area just up here. And what we're allowed to do from this point is drop one time frame lower, and we will do that by going to the 60, and anywhere then within this first chance entry, which is this box just here, we can look for a rotation pattern. Rotation patterns are double tops and double bottoms. They are also head and shoulders. They are the 2 patterns we can look for within this instance. Now, the good thing about rotation patterns is they provide us an excellent opportunity to get tight stops. And I'm just going to give you a for instance. If the market came up, did this, and provided us a valid double top opportunity structure was held, we had the RSI confirmation, we came up to test the first test, then that means that we can get tight stops just above here. Now if we did a head and shoulders, move higher, pull back, move higher, pull back, right shoulder, it means that we can still get tight stops because it's a rotation pattern and we are not expecting the head to be violated. So there are three ways the market usually rotates. Two of them are tradable options, head and shoulders and double top and double bottoms. The other way the market usually rotates is right here, a V point. So we see a directional move lower, a directional move back the other way. This, in my opinion, is not tradable because it doesn't offer you a safe place to put stops. Now, I've given out a lot of information there. Just give me a yes, guys, if you're following this. Now, just clear up this chart while we're talking. Yes, yes, yes. Yep, okay. Excellent. Right, the way this is setting up, for me, there is going to be no opportunity here within the first chance because we do not have the RSI. At this stage, we're only overbought at around 61 and we need it to be over 80, and it's not forming the way that I would like it to for a double bottom. What there is though is we do have this internal level of structure right here. So I'm actually just going to delete the first chance entry because I don't believe that's going to provide an opportunity. But here we do have a structure level, and let's just reposition this. And every time we drop down the structure levels, unfortunately we do have to draw out structure again so that we can keep the perspective of what's happening. And the perspective is that on the dailies, we've got no confirmation, we've got no confirmed break below, close below or violation, but based on the 382 and the way we're moving and we are pushing lower, and we do have a confirmed violation on the 240, it is looking like we're going to come lower. So that's the mindset that we want when we're doing our top-down analysis. So here on the 60, we had a move higher, a pullback, a move lower, and now we're seeing a pullback. So we do the whole thing again. We look for standard trend continuation rules, which is the three chances. We had the first chance entry in the wicks and we've already violated and closed above that, so that is no longer an option. We have the second chance entry, which is within the candle bodies. That is still an option. And then we have the last chance entry, which is just here. So second chance entry is very simple. It's probably one of the easiest strategies you can implement into trend continuation. We are simply going to wait for a lower low, lower close candle. And guys, if you don't know what that is, go to the education material. It explains what a lower low, lower close candle is and how it's valid. Now, if we don't get that, we can then look within the last chance entry here. But what I said to you earlier is that what we are allowed to do is drop one time frame lower, and now we're on the 60 and have a clear trend and a 3-point move. We are once again now allowed to drop down one time frame lower, and we're going to drop to the 15. Okay, so here on the 15, I'm actually just going to keep both of these on. So here on the 15, we are allowed to take a trend continuation trade if we get a lower low, lower close on the 15. Does anybody else know another signal that we can use to add confirmation to this trading opportunity? I'll give you a little bit of a clue. It's down this end. It's something we look at to determine that the market may be running out of steam. Divergence, RSI, yep, RSI overbought. My settings are set to overbought at above 80 and oversold below 70, and right here we are at 81.94, and that's an indication that the market is running out of steam. So right here, because this is the second chance entry, if we get a lower low, lower close, that would be a strong sign that we could see a continuation to retest the lows as a minimum, or a potential trend continuation. Now there are other things we can look for as well, and we may have, maybe an ugly one, but we may have an AB equals CD pattern just here. And you see we've come up to roughly this area. These harmonic moves or AB equals CD patterns are not definitive, they don't always occur to the pip, and there's going to be a little bit of judgment involved as to how high price can go as to whether or not this AB equals CD pattern is valid for you. Now I would say that we're right at the extremes as for this to be valid for me. So what I would need to see now is for this candle to turn and be a lower low, lower close for me to include this AB equals CD pattern. But it doesn't stop there. What we want to do is we want to try and add as much confirmation or as much confluence as we can do to the chart so that it provides us the highest probability trading opportunity. So we can throw in a fib and we can do an inversion. And we do have a 1618 just at the completion of this AB equals CD pattern. It's a bit short of price though, but what we can do then is look for a fib extension, and right up here we do have a 1618 coming into this level. Now what I also like to do is I also like to bring in psychological numbers. They play a very important role for me in terms of confirmation, in terms of stop placement, targets, and getting involved in opportunities. And for me, the most powerful psychological numbers are those that end in 0 or 00, so every 100. So right here we have 9200, and unfortunately that is all the way up here. So right at this level we're at 9110s, maybe a little bit lower, so we don't have a psychological number here. So again, that's not something that we can include. One thing that I am looking at on here is that from this point we had a fairly directional move. We then had an inverse triangle. Can you guys see that just here? Maybe if I go ahead and make these a different color, might be a little bit better for you. That yellow might be awful, but we'll give it a go. Okay, so you guys see that? Yep. Okay. Typically with these patterns, and I'm not just talking about inverse triangles here, I'm talking about breakout patterns. So they are things like low and high and tight flags. We're talking about standard flag patterns, some form of falling channel, anything that forms a channel like this. If we're in trend and there is room to the downside, typically the middle of these offer great shorting opportunities. So that's something that I'm making a note of, that we are up in the middle of this inverted triangle. We've got the RSI overbought, and if we get a lower low, lower close here, this will be a trading opportunity. However, I don't know how far the market will come lower past this level, so for me this is just going to be a one in, one out. So if we was to get an entry just here, can anybody tell me where my stop should go? Where would be the safest place for the stop loss to go on this potential opportunity? Pete, above the wicks. Yep, anyone else? 180R above. Yeah, Martin, yep. above the outside return. Yeah, exactly. So this entire level here is the outside return. So if we were to get an entry now, the ATR currently is only 5 pips, which is going to take me to this level, and I'm going to leave the crosshairs right at this point. Now, can anybody tell me the problem of putting my stop at this level? If you look at the price, can anybody tell me something that's quite significant at this level? George has got it. Anyone else? Michael? Yep. 9,200. I just said that psychological numbers play a very, very important role in target taking, in stop placement, and they act like structure. So structure is drawn to it like a magnet, but it also holds it, psychological numbers. So having my stop another ATR behind, just 5 pips behind it, is going to offer me a lot more protection for this trading opportunity. Does everybody agree with that? Just give me a yes. Excellent. So if this is our risk, we're going to make that red, and we're going to be playing for a retest of the candle closes, not the lows, a retest of the candle closes minus a few pips, which is going to be around this level. And I'm just going to go ahead here and make that green. And I'm going to get rid now of this AB equals CD pattern. We're pushing higher, so that isn't something that's valid for me. So it's looking like this opportunity, if we do get this lower low, lower close, is only going to be around a 1-to-1 risk to reward. Does anybody, well actually, I'll tell you what we'll do is let's drop one time frame lower and just see if there's anything on the 5. I do like to do the full top-down analysis and drop down to the lowest time frames, because it may provide another opportunity that just adds a little bit more confluence. So we have the high of our structure level here, and I'm going to throw a fib on from this level to our swing low, and I was hoping that we were going to hit a 50% for a back pattern entry, but we didn't, we fell short. So what else do we have? There's nothing else here, to be honest with you. Okay, so this opportunity for me is going to be on the 15. I'm going to be paying close attention to this. In terms of the risk on this trade, we'd be looking at something like 19 pips of risk for a reward of 21, depending how high we push up here. So just before we move on to the next currency pair, we've got any questions on the Aussie dollar CAD? I'll give it a few seconds. Obviously, please remember, guys, we do have a 10 to 15 second delay. This is YouTube live after all. What I want you to do is, or at least what I do is, I have a checklist that I run through. So it's not just looking at the higher time frame analysis, it's looking at the candlestick formations, it's looking at fibs, it's looking at psychological numbers, it's looking at the RSI, it's looking at not just the candlesticks but potential candlestick patterns, and I like to do that on every single time frame. And if you get into the habit of doing that, well, that habit is just going to kick in without you knowing it, and before you know it, you're not going to be making mistakes of forgetting to check psychological numbers, because there would be nothing worse than the market coming up to the 9,200 psychological number, which is just 1 ATR above the outside return, you being stopped out to the pip, and it turning and hitting targets, and then you're later realizing that there was a psychological number. Okay, so getting into that habit, that routine, is key. Okay, let's go and take a look at something else. I'm going to keep that on the radar. Let's move that out the way. We had the Aussie dollar next. Okay, I've got here, we've got a potential trend continuation on the lower time frame. Let's take a look at the higher time frame. Pretty much like the Aussie dollar CAD. This was our most recent high. We've got a fairly directional move lower. We've seen a pullback and we've seen another directional move lower. Now I'm going to put a structure level on at our very lows. And if we look here, this candle which closed yesterday was a confirmed break below, close below, also known as a violation. This is now a sign that the market could see a continuation lower. Not only that, but just like the Aussie dollar CAD, we've come into a 382, and when we see this directional movement, it is a sign that we could be moving lower. Also pay attention to the RSI here on the daily. We are not oversold. If we were oversold, it could be an indication that we could see a little retracement here, but I just want you to get into the habit of looking at all of these things. The RSI, psychological numbers. Are we at a number that ends in 100? No, we're not. Let's look left for structure. The only problem here, excuse me a moment, clear the old throat, is that we have this long wick, and technically until we violate the low of this wick we don't have a confirmed violation, though I would be very happy here on taking a trend continuation trade for a minimum of a retest of structure, and I'll show you what I mean by that in just a moment. So let's drop down to the 240, and there's something here that I really like the look of, and I'm just going to delete these off, and we will do the entire higher time frame analysis again. So this was our most recent swing high. In fact, those of you that can remember, I think it was last week, I talked about that, guys, we have a valid double top. I'm waiting for a pullback. I'm waiting for a 2618 entry, and I told everybody that, guys, I will be selling the market. I will be playing for a retest of the lows. What did we not get? We did not get the retracement. Last week or the week before, I think I had 5 or 6 higher time frame opportunities. Every single one of them played out for between 100 and 150 pips. Did not get involved with one of them. Instead, a lot of you know that I've been in a drawdown for the last 2 weeks. Before that I had a phenomenal 3 weeks, but the last 2 weeks I've been in a drawdown, and it was just unfortunate that I took trades that met the plan that lost, but I had 5 or 6 of these big trading opportunities that came off and never gave me an entry. Renko, take care Renko, you can always catch up. These are recorded. So that was a beautiful move. How much was that move for in the end? Yep, 116. Okay, don't want to dwell on the past. Just one thing to note just up here, guys, is that we all use different brokers, and there was somebody that said it wasn't valid for them. Up here we'd actually closed above this first test, invalidating trend continuation. So you have to go off what your data is and what your broker shows. So I'm just going to go ahead and do this, and I'm just going to go ahead and highlight the wicks. So does anybody know why I really like this setup? What have we just done in this scenario? And if you just joined us, welcome. We're on the Aussie dollar looking at a trend continuation opportunity. What do I like about this setup? Yuri, no, okay, don't worry Yuri. We'll go over it in a moment. Yep, we've broken support. Not only was it just support, but it was 1, 2, 3, 4 times. Now for me, yeah, don't worry George. I knew what you meant. For me, if we violate major structure, and major structure for me is declined as being tested 3 times, then that is going to, if it was tested 4 times here, but we violated it, then as we come back into this resistance level, this is going to be major resistance for me, and this could offer a very nice opportunity to get involved with the first chance, which is just here, and that's why I've highlighted the wicks. Okay, there is a little bit more confluence here though. Let's take a look. We have a swing in the market, we have a directional move. If we duplicate it to move it down, we've got a, well, we've fallen a little bit short of an AB equals CD pattern, so we could potentially see the market come a little bit lower. But this AB equals CD pattern, if it was to kick in, we could see a move higher. And if we throw a fib on, because AB equals CD patterns are fib based, look at what we have coming in right to our first chance entry. What do we have, guys? And I'm asking you just because I want this to be a little bit interactive. What can you see? It's not a golden ratio, but it is one of the main fibs. Curse this 15-second delay. 382 exactly. So we have a 382 coming into the first chance entry. Even if the market did pull down a little bit, we are still within that zone, so we have fib confluence in that zone. What I'm going to do as well is I'm going to highlight this internal level of structure. I'm going to have to make these different colours, aren't I, just to make sure that we can see the difference between them. What's going to be a decent colour? I'm going to make it green for the price reversal zone or the kill zone, and we're going to go ahead and drop 1 time frame lower. I need to drop to the 60, don't I? 1 second, let's go back to the 60. Okay. So here on the 60, we can readjust. Well, if we look here, so that these are still highlighting the first chance entry, the wicks, and zoom in here, we can see that we do actually now just need to adjust this kill zone down to the first chance just here. So remember, guys, in the first chance entry, we're looking for 2 rotation patterns, aren't we? We're looking for double tops, and we're looking for head and shoulders. So this is the first chance entry. The green is the second chance entry, and that runs from the close of the candle to the close of the candle, and the last chance entry is the wicks. And again, in the course material, when all right, George, don't worry, I'll catch you later. And we're going to be looking for double tops and double bottoms in the first chance entry and in the last chance entry. So right now there isn't a great deal that's setting up, but as we see the market coming to this first chance entry, we're going to be looking for that double top, and we're going to be looking for a retest of the candle lows, and we're going to have our stops and ATR above the high. The other rotation pattern is going to be a head and shoulders. Double top would be ideal here because it would give us quite a nice reward to risk. Something like 27 pips of risk there for maybe 10 to 12 pips of risk, something like that. If not, we'll look for the second chance entry, which will simply just be a lower low, lower close in this green area. If not, we're going to be looking for the rotation pattern up here. Everybody follow that okay? Any questions on the Aussie dollar? Just have a sip of water while we're waiting. Okay, we'll do one more pair and we'll take a 5-minute break. But I hope you guys can see that it's monotonous. It's doing the same thing all the time. We're doing the same higher time frame analysis. What I'm going to do is I've actually got 4, 5, 6, 7, 8. I had 9 opportunities on the radar, but I think some of them have been blown out the water. We'll take a look next at anything on the Euro Aussie. Nope, that's violated, so let's scrub out that. Euro Yen. Oh, that's already hit targets. 1 second, guys. Okay, let's bring over the Euro Yen. Okay, those of you that took the Euro Yen flag pattern, congratulations, we hit this morning for 57 pips. That was a nice winner. Okay, so we're going to do the same thing. From our highest swing, we're going to draw out the trend. So we had a move lower, a pullback, a move lower, a pullback, a move lower, a pullback. This was the outside return on the daily candle. Right here you had a lower, lower, lower close. This was a trend continuation second chance entry, and this would have been your entry right here. I did post this as an idea in the quick hit review videos. The problem was that was the risk, this was the reward, and it was actually over my maximum risk. It was nearly 200 pips of risk. But the projected targets are still down here. So the journey is still ongoing, and we're still moving very directionally, and we can still look at getting involved because we have this much room to go before potential targets have been hit. So we can still look for trend continuation opportunities. Check out the RSI. We are not oversold, but what's the other thing that we want to be looking at, guys? When we look at the different time frames, things that we want to be paying attention to. Thanks, Ashraf. Okay, hardly any difference there. Okay, daily time frame. What do we want to be paying attention to right here? Psychological numbers, 120, 100. They act as magnets. However, just down here we have our structure low, so it's something we want to be paying attention to. Let's go down to the 240. And here on the 240, this is looking like quite a nice setup. Just to go over something which again was another trade that one for which I couldn't get involved was the AB equals CD pattern. We had a head and shoulders up here, again offered no entry, but we saw the reversal. But look at this internal level of structure right here. If I highlight it, this candle has now violated this level of structure, giving us a confirmed break below, close below. This is more of an indication that we can come lower to our targets. In fact, if you want to be a little bit more aggressive, we can actually look for our targets at the closes of the candle on the 240. The only problem with doing that is that we are shooting past this psychological number, so something you want to be a little bit wary of. But let's draw out the trend again. So from our swing up here, we had a 1-point move, a retracement, a 2-point move. We've just violated structure, and there is room to come to the downside. So I'm actually going to be waiting for another trend continuation opportunity here, and we're going to be looking for the same things, guys. There is actually no wicks down here, so it would be a second chance entry within the candle bodies, and it would be a last chance entry up here. And I'll be taking 2 targets, a retest of the structure lows and then a continuation a little bit lower. Any questions on the 240? If not, I'll go and take a look at the 60. Okay, here on the 60, there are a few things that you want to be paying attention to which could provide you a better reward to risk. And let me just draw this out. So if we got our second chance entry, which was a lower close, and we went an ATR above the high, which is about there, and we'd played for a retest of the candle closes, which was there, you can see we have a positive reward to risk. Very good. Excellent. Okay, but there are things we can look for that could potentially reduce down the risk. Okay, and within this area just here, we have lots of levels of structure. We have this level right here. We also have this level right here. Can anybody tell me within these two structure levels what we can look for that would provide us a better place to put our stop, where we can potentially reduce our risk from all the way up here to maybe down to this level? Anybody tell me what we can be looking for? Hey Terence, welcome. We've done a couple of pairs. Aussie dollar CAD looking at a trend continuation opportunity. Aussie dollar here on the euro yen, trend continuation as well. These are recorded so you can always catch up. Not very talkative you guys today. Okay, what we can look for is within the wicks just here. See these wicks just here? See these wicks just here? These wicks just here? These wicks just at the top here? What do we always look for within the wicks? What are the two rotation patterns we look for? Remember I said there are three ways that the market reverses. Two of them are strategies we can implement. Double bottoms, head and shoulders, yeah, exactly. Okay, so if within these wicks here we were to get a valid double top or a valid head and shoulders, we can reduce the risk down. Let's say that we get the opportunity here, we can reduce down our risk. I've done that wrong now, haven't I? I wish there was an undo button on NinjaTrader. We can now get our risk to reward something like that. Now I don't want to go into too much detail at this point. I do that in the educational material, but we can then drop another time frame lower and look for the double top or the head and shoulders within the wicks. Okay, and if the market was to pull up to here and give us that double top or that head and shoulders, what you can do then, you can either be aggressive with, let's just take the double top for instance. You can be aggressive with the double top by doing this, and you can have a limit order set right here which triggers you into the market instantly and puts your stop automatically up here and your target already here. Now if you want to be more conservative, you can wait for this candle to close and make sure that we do not violate the double top. Does anybody know of another conservative way where we can work a double top? I actually call them a confirmed double top. It will provide more confirmation. Do we know what that's called, that strategy? Or at least what we can do, what we can wait for to confirm that this is actually a double top. Marcus 2618, exactly. Guys, if you don't know what that is, again, it's in the course material. A 2618 is when we come down and we physically have a confirmed break below, close below the V point of our double top. And this is now giving us a potential rotation in trend. Now the market can do one of two things from here. It can just continue lower. It can continue higher. But we have a higher probability of the market coming up to this level to what's called a 61.8 fib. And what we can do now is we can actually take this again to the next level. We can either be aggressive with our entry, so we can have a limit order at the 61.8. We can wait for the market to run out of steam and maybe give us something like a 3-bar reversal, or show signs, a candlestick formation that we're reversing. Maybe we want to wait for the RSI to be overbought. There are lots and lots of things we can do to be as aggressive as you like or as conservative as you like. Now, the more conservative you are, you're not going to have as many trading opportunities. But the more conservative you are, the higher the win rate you're going to have. Now, here's the thing. Look at what we've just done. If we're being very conservative here and we wait for a lower low, lower close, do we not still have a far better reward to risk and a far higher probability trade than we did simply just taking a lower low, lower close on the, was it the 240 time frame, guys? On the 60 or 240, I forget. Is this not a better reward to risk and a higher probability trade because we have a double top, which is confirmed, 2618, where we've had a lower low, lower close. We may have the RSI confirmation, and we have a better reward to risk as well. Everybody follow that? I know it's a lot to take in, particularly if you're not 100% sure about reading structure. Have you got any questions on this, guys? Don't be afraid to ask questions. That's what these webinars are for. If you're not understanding something, the chances are that someone else is, and it may be a case that I'm not doing a very good job of explaining it as well. You guys hear me? I'm getting a whirly sign. Internet may have frozen. All right, guys, I've got a whirly sign on my internet page, so I'll just ignore it. Okay, so no questions here on this. So that's what I'm going to be waiting for on this setup, and I hope you can see that for trend continuation, we're simply just implementing the same 3 strategies. We obviously want to pay attention to psychological numbers. There is one just here, which is a great place to hide stops behind. And look at that, if we've got the double top up here, being 5 to 10 pips behind that psychological number would offer you a real good place to have a nice protective stop there as well. Could potentially throw on a few fibs as well, but we'll see if we can get up to there. What else do we have here? We've got the market moving lower. You may have actually a trend continuation trade right now on the 5. Look at what we've just done here. We've got a very bearish move. It looks as though we have a small outside return, so let's just drop down to the 5. Just 1 second, guys. Just bring over the Aussie dollar CAD. Just look at what we're doing on the Aussie dollar CAD. RSI is overbought at 83. We've put in an indecision candle. We want to be monitoring this for a lower low, lower close for our entry. So pay attention to that, will you? Right, here on the 5, we do exactly the same thing. From our most recent high, we see a move lower, a pullback, a move lower, Have we just violated structure with a confirmed break below, close below and a violation? Yes, we have. We now want to be looking for the first chance entry, second chance entry, last chance entry. Okay, and what do we have here? Let's just check left first. Just let me go back out to the 15. Here on the 15, we have just violated that level. Okay, we're not oversold. Candlestick formations on the 15. There's nothing here for me indicating any type of rotation or continuation. Let's go back to the 5. Okay. Now it doesn't look like we're going to get an entry here, but if we do see a move into the second chance entry, this could be a nice area to get involved with stops here. Unfortunately, targets though, you're going to end up with an inverse reward to risk by the time you include your spread. So this might be one where you hold for second targets for an extension, maybe down to this 12100 psychological number that we spoke about. So something to keep on the radar as well. Quite a few trend continuation opportunities, which is unusual. Trend continuation typically only happens 30% of the time, and when you factor in the fact that you may not have a great reward to risk, you may not get your entry, you may be asleep during the time it appears, there may be a major news event that's just coming out before you get your entry, you're actually quite limited on trend continuation, but we do have a few opportunities there. Okay, let's go and take a look at Euro New Zealand. Okay, I'm going to have to move the chat out of the way. Actually, do you know what we're going to do? We're going to take a look at the pound yen instead. We have an opportunity here, and I'm going to tell you why I'm not being aggressive and why I'm waiting for confirmation. Okay, we have an AB equals CD pattern that's coming to structure. We have a valid double bottom. We've actually got a valid triple test right now, and we could be seeing the market go higher. Let's go and do the higher time frame analysis. No problem, Anthony. You can always catch up with the recording of this video. So what I'm going to do here is put a structure level on at the closes of our candles. In actual fact, guys, what we're going to do is, we're losing a few people here. My voice is just on its way out. We're just going to take a 5-minute break, and we're going to carry on with this opportunity on the pound yen. Okay guys, I'll see you in 5 minutes. Okay guys, welcome back. Did everybody get coffee? I got water. Welcome Terence. What is a psychological number? It is a number that ends in 0 or 5, and here on in the market typically every 100, so 140 to 100 is a number that ends in 0, and they act as magnets for structure, great places to hide stops behind and take targets as well. Also every 50, so 140, 150s is also another psychological number. For me personally, the ones I really pay attention to are the ones every 100, particularly on the pound pairs. They're very powerful on the pound pairs for me. Aussie dollar CAD, lower low, lower close. Check it out, Marcus. Lower low, lower close, RSI confirmation. Let's go ahead and get short this opportunity. Okay, and I'm just going to go and look at the 60, just check my targets. On the 60, I always like to go one time frame higher and just check out the closes of the candles. We're above the closes of the candles. Guys, look at what we've just done on the 60. We've just put in an indecision candle right here. By itself, it doesn't mean anything. However, look, learn to read candlestick formations. Big momentum, bullish candle. Instantly ran out of steam with this doji. One time frame lower. We've put in a lower low, lower close, and we add the RSI confirmation, okay? And look at what happened. This played out in the middle of that breakout pattern that I spoke about, okay guys? Trading is, I don't want to say easy, but trading is a job, okay? And like any job, when you start for the first time, you don't know what you're doing. You're a bit like a baby, you're making mistakes, you need somebody to hold your hand, show you around, but then after a period of time, you start to understand what the job role entails, you start to get better at the job, you learn new techniques that speeds up and improves the quality of your work. And that's all trading is. And if you get in the routine of having a set process, and that you and a strategy that you've tested and you know to be profitable, and you have the ability to implement that opportunity, then over time you'll be profitable. And that's basically what trading is. I need to be 1 pip lower here. So the risk on this trade was, let's have a look. Where's my reward gone? Okay, 18 for 21. Just let me do a quick screenshot of this and send it out to the guys. Come on, update. Nope, it does not like that. It does not like screencast when I'm already recording on YouTube live, so we're going to scrap that. Come on. I think could have caused a problem. Yeah, I'm going to stay away from that. Okay. Thanks for the heads up on that, Marcus. Let's see if we can get a nice 21 pips out of that. So here on the pound yen. Oh, by the way, guys, did you like the 5-minute video? What did you think of it? Did it pass the time okay? You guys hear me okay still? Just give me a yes if you can, and I'm going to go ahead here and continue with the pound yen. So on the pound yen, yeah, Ashraf, I like the bit where he's banging his head against the wall. I love that bit. So from our highest swing up here, we have a very directional move, a very small pullback, and a move lower. And if we move this up, we have a confirmed break below, close below this level. However, we are down at this structure level, although we are actually pushing past the closes of the candles. Now, we have strict rules within trading, but there is also judgment. My judgment here is just look at the amount of days, weeks even, where we've seen selling pressure. And we know that when we see a very small pullback, we typically see a long extension. And that's what I'm predicting here. I'm actually predicting that we could see a move all the way down to this level. Now we might see some ebbs and flows within it, but I am expecting quite a continuation here. So let's go and drop down to the 240. And we do the same thing. We move this up to our structure level. And from our highest point up here, we draw out the trend. And it's just one straight trend, to be honest. We go to the 60, we do the same thing. Right, we have new structure low, outside return, new structure low, outside return, new structure low. Pay attention to this outside return, and then a new structure low. Okay, pay attention to candlesticks as well, guys. What is this candlestick here? What does this candle represent? It shows that there's a lot of what in the market? If you just joined us, welcome. We only have a couple more currency pairs to go through, but you can catch up on the recording of this once we've finished. It represents selling pressure in the market, and we've just violated this level of structure. Bearish momentum. Yeah, well done, Ashraf. Bearish momentum. Look, we're in trend. Look at the size of this candle compared to the rest of them. We dropped from the structure level, boom, straight down. Lots and lots of selling pressure. Now, from this point, we're actually moving sideways. And if you go and look at the educational material for low and tight flags, this is a setup for a trend continuation low and tight flag. So I'm going to drop to the 5 and see if we have the rules met here. Ooh, it's a bit ugly, but still could be valid. Okay. We look for a swing. This would be it up here. We look for our move lower. We must have the market adhering to a horizontal trend line. We have 1, 2, 3, minimum of 4 touches. We came down for a 5th. Okay, we cannot take these at psychological numbers, guys. Okay, I'm going to put a structure level on. We want to make sure this has not occurred at structure. Okay, we have this one test right here. What else do we have? That's it. I'm going to go back out to the 15. Okay, guys, this is a valid low and tight flag opportunity. We're not going to get a phenomenal reward to risk right here. Just let me look left again. I want to check something else. Spend as long as you want checking the validation of these patterns, because if you take it and it's wrong, chances are it's going to lose. There is no structure there on the 60. and if you're like me, you're not going to like losing patterns, losing trades for that instance, but they do happen all the time. Okay, this is a valid low and tight flag for me, so we're going to be looking from our swing low to our swing high. We're going to be playing for that 127 fib. Now the only problem with this is that if we enter in now, we need to be an ATR above the highs, which is going to be 10. It's going to make us 92. It's going to be our risk. And we're going to have an inverse reward to risk. We do want to front run. We never want to play for dead on the 127. These things can literally just tap the 127, and obviously we need to spike past it because of your spread. So we do want to front run, and you can see right now we've got an inverse reward to risk. So what we're going to do is we're going to wait for the market to come back up. Now I've already had my entry signal from the fourth test. All I need is a red candle, but since then we've come down here for another test, and so I'm going to be aggressive here with my entry. I'm going to set a limit order right here. So this is going to give me a risk of 22, 29, so positive reward to risk. Let me just drop to the 5, see if there's anything else here that we can use as an entry. Let's check out the 5 range. See if we can see if price pushes a little higher. No, nothing on the 5 range. Okay, I hate it when my charts does that. Reduces to fat candles. Okay, so I'm going to go ahead here. I'm going to set a limit order for this opportunity. We're going to be looking for 22 of risk for a reward of 29. So sell limit right there, and don't have my alerts on this chart, which is a bit of a pain. Okay, so we'll see if we get filled that day trading opportunity. Any questions on the pound yen, guys? So let's go and take a quick look at the pound dollar. We do have price going lower. Now this here, I was expecting a pop to the upside, we never got it. So anybody got anything on the pound dollar they're looking at, by the way? Any trading opportunities at all? So what do we have? Well, we have our most recent swing up here. So we had a move lower, a pullback, a move lower. If we put a structure level on, we can see yesterday we had a confirmed break below, close below, and we do have this big wick, but it is looking like we could see price come down to this level. If we throw an inversion on, we've got a 1618 down at that level where we could potentially see targets come to. An extension, well, not too much to be honest with you. Let's drop down the time frames. Oh, just before we do, psychological number 12500 right at this level. The RSI is not oversold though. Let's drop down to the 240, and we're going to repeat the process again. So these were our highs up here. We saw a move lower. Looks like we have a small amount of structure just here. We saw a pullback and then a move lower. Structure level on at our lowest structure level just here, and we have violated that level. We are oversold here on the RSI, and I'm going to move this structure level up to that 12500 psychological number, because if I'm involved with a trade, this is where I'm going to want to take targets. Now we could look for a pullback here, and we're going to look for the same things, guys. We're going to look for a first chance, second chance and last chance entry. Or if we drop down the time frames, let's go to the 60, we could look for this market to simply continue, and we do the whole thing again. We had a move lower. Okay, we've seen a pullback, but there's nothing really here for me to get involved with. Let's go and take a look at the 15. Nope, nothing here. So really for me it's going to be the 240 for a trend continuation trade. I'm going to be looking for the market to come back into this zone and look for an entry reason here to get short. Any questions on the pound dollar, guys? Quite a quick one there. Got a couple more to run through. New Zealand yen, looking for a trend continuation opportunity. Oh, this could be producing something now as well. Okay, higher time frame here. So swing in the market, we had a move lower, a pullback, a move lower, structure level on at the lows. Yesterday we had a confirmed violation or break below, close below. We are though within the wicks. Okay, can anybody tell me though, with that confirmed break below, close below, what candle we have here which indicates there's more selling pressure? So we've had the confirmed big bearish red candle, but is there another candle here which indicates there's a lot of selling pressure? Anybody know what it is and what it's called? And give it a few seconds. Remember guys, if you just joined, YouTube Live has around a 10 to 15 second delay. This is a doji. So straight after a lot of bearish candles, we see a big bearish candle that violates structure, and this candle right here represents selling pressure. Higher probability, Peter hammer, inverted hammer. It's called an inverted hammer. Hammer is this one right now, where it's at the top. This one's an inverted hammer. Represents selling pressure. Yeah, so just here on the 240, you know, it's indicating that right at this level, and I'm going to put another structure level on. And remember guys, there are three stages to a candle. We have the candle body, which is very small, the wick, the lower wick and the upper wick, and price tried to push higher, and at this level we saw lots and lots of selling pressure. This means that we could actually have relatively tight stops just above this wick. Okay, that's what I'm thinking at now here on the daily. So let's drop down to the 240. And here on the 240, it's telling us the same thing, selling pressure, a move lower, a pullback, a move lower, structure level on at our lows. We have a confirmed break below, close below. So this outside return here, this outside return is going to be that inverted hammer. And it just so happens to be trend continuation, a 3-point move, an outside return. Okay, so this is adding to the probability that the market could move to the downside. So look left for structure. Well, we've already violated the closes of the candles and we're in the wick, so we want to be wary of that. But this is another pair where we're going to drop down the time frames and we're going to be looking for the same thing. We're going to be looking for a lower low, lower close. So let me just go back and redo this. So first chance entry was here. We've already violated the wicks, so we're going to be looking for the second chance entry just there, and then we're going to be looking for the last chance entry right here. Okay, let's drop back down then to the 60. and here on the 60. The trend is still valid here on the 60, so we can technically drop down to the 15. So move lower, pull back, move lower, pull back, move lower. There's your pullback, there's your move lower. So if we get a lower low lower close on the 60, it is going to carry more weight than dropping to the 15. That's one thing you want to bear in mind. But here on the 60, we don't have the RSI confirmation. There is no psychological number. Is there any fib confluence? We have a 618 just in the middle there of our kill zone. If we look at this level, we have a 382 in the middle of that kill zone. We don't think we have much else. Nope. Okay, let's drop down to the 15. And there is this minor level of structure here. Okay, no trend continuation here, guys, on the 15. See this? Double bottom. It's a rotation pattern. We've already violated the V point. This rotation pattern for me means that on the 15 I cannot take a lower low, lower close candle as the entry. Okay, because we've already put in a rotation pattern. I can't break past this double bottom, so I can only get an entry on the 60. So we're simply going to wait. We're going to wait for that lower low, lower close, and we're going to wait for the last chance entry there on the New Zealand yen. That brings me to the last currency pair, guys. Any questions on the New Zealand yen while I bring over the pound dollar? Pound New Zealand, sorry. Okay, this is going to be a big trade on the pound New Zealand. A lot of pips on the pound New Zealand, and we have a head and shoulders stroke 2618 setting up. So from our swing high just here, we have seen several weeks of lots and lots of bearish movement. Didn't quite come into a 382, but we have violated this level of structure, this level, and we're kind of down in this level right now. Let's drop down to the 240. This right here was a valid double top. Test 1, test 2. RSI went overbought with divergence. It also came in at structure. It wasn't one I could take aggressively because there wasn't enough confirmation. The structure level wasn't good enough, but we've now waited for confirmation. What's the entry technique that we can now use to get involved with a trading opportunity where we could potentially come down to retest the structure lows here? Anybody know how we can get involved with this confirmed double top? $26.18. Okay, so we put a fib on from our swing high to our swing low, and we look for that 61.8 fib. Now this is a big trade. We're looking at probably 100 pips of risk on this trade, but there are things we can do, just like we've done in one of the other currency pairs, and we can look at reducing down the risk. Let's go to the 60. And right here we actually have a head and shoulders. So we have a swing in the market, we had a move higher, a pullback, a move higher. We've just violated structure. We can now look for a pullback, and we can use trend continuation strategies. For me, I like to use the first and last chance entry. So right here we have the wicks. Pay close attention to the wicks of the left shoulder. Head and shoulders, by the way, I do run through all the strategies in the educational material, and we can look for rotation patterns within these highlighted areas. And again, guys, rotation patterns provides us safe places to put our stop loss just above here, stop loss just above here, And what will that do? Well, that'll mean that here we may have this much risk. Let's make that red. Or if we go higher and put in that rotation pattern, maybe up here, this could be the risk. But the reward could be a retest of the start of the pole or the lower structure level just down here for the head and shoulders. Okay guys, you might be thinking that that risk to reward is insane. These don't come off very often, but if you have the strategies in your toolkit and you know how to implement them, then you have safe places to put your stops. And like we have a double top on the higher time frame, a confirmed double top, a 2618, a head and shoulders, and then maybe here on the 60 another rotation like a double top or a head and shoulders or a 2618 with more confirmation, well then opportunities like this do happen. And actually, if you're only say a 30 or 40% trader where only 30 to 40% of your trade wins, well, you only need one of these and you've effectively gone straight into profit and probably doubled it. So just having the tools in your toolkit and knowing how to action them, these opportunities do happen. That was the last pair, guys. I won't run through the full 13 pairs. We've been going now for an hour and a half and we've lost a few people, but any questions, guys, on the pound New Zealand? And do me a favor, guys, within the chat forum, if you have any setups, please don't be afraid. Throw them in the chat, do a screenshot, chuck them in there. More pairs, more eyes on the charts means more opportunities, means less things that we actually miss, because we can't all sit by the charts for 3, 4, 5 hours a day. Any questions, guys, just before we then wrap this up? All good? All good? All right, guys, thank you very much for attending. I'll see you within the chat and on the next YouTube Live.